Hello. Hi, everyone. Hello.
Hello, Mr. Victor. You can proceed. We can hear you.
All right.
Hello. Yeah.
Good evening. Good evening. Good evening. Mr. Hagan. Mr. Hagan. Mr. Hagan.
Mr. Akansi, I can hear you, but I can hear some
Okay,
echo.
so you okay, so you are welcome to today's episode of AES entrepreneurship. Hello, can you hear me, Mr. Hagan? Sorry.
Yes, Mr. Akansi, I can hear you clearly.
Okay, we warmly welcome you to today's episode as well.
Thank
To
you.
those who are listening to us, we have Mr. Hagan Sam, who is a business consultant, and today he's going to take us through financial record keeping. So we would want to pay constant attention from today's lessons. Mr. Hagan, we are all on listening ears. Thank you.
Thank you. Thank you so much for the opportunity, Mr. Okansi. And then thank you for the opportunity, African Entrepreneurship School. All right. So, Mr. Okansi, I believe you can clearly hear me. All right. So, I am glad to be on this platform. And I believe our discussion here will go way forward to help our colleagues who are in the business field to make good decisions with their business. All right, so we will move forward and then talk about um, financial record keeping. On this program, we will discuss understanding financial record keeping, knowing what it is,
Okay.
Okay. All right.
Okay. So,
Good. So, as I said, we will be talking about understanding financial record keeping.
Mr. Hagan, if you can hear me very well, there is an echo. There is echo from the background.
Yes, I can also hear that. Let me try and verify that. Please kindly mute your microphone and let me see. Hello? Okay, I think this is better. Mr. Gash, can I move on? Those in the comment section, please find out for me if it is okay for me to move on now. Great. So, as I said, we will be talking about understanding financial record keeping, the benefits of good financial record keeping, who needs the business records, that is, who needs the financial records that you are keeping. We will also talk about business operation cycle. We will also look at the basic books to keep, and then finally we will look at basic business transactions and then how to keep those records. Great. So we move forward to the next slide. And then when we say financial record keeping, or basically when we say record keeping, what do we mean? We just mean keeping accurate and up to date record for your business. And we all know that keeping accurate and up to date record is vital to the success of every business. Record keeping is the act or process of creating and maintaining financial records for all transactions of a business. Yeah. And then I also noted here that record keeping should take place in every stage of a transaction. We all know business are all about transactions, and therefore every stage of a transaction there should be record keeping. And the stages include maybe purchasing of goods, selling of goods and services, inventory taking and stock taking, and all that. So all these ones are stages where financial record keeping should be taken to note. Now let's look at the benefits of keeping good records as a business. One noted one I noted 8 points, but there are more than 8 points that point to the benefits of keeping good record. First of all, I pointed the fact that it maximizes profits. When you start keeping good records of for your business, it helps you to put down certain things that are going on in your business, and then you get to know the good side and the bad side, and then the things you need to do to maximize your profits. And for that matter, it helps you to maximize profits. And then in that same point, if you are maximizing profits, then you are minimizing losses. Keeping good record also helps you to measure performance. You all can bear with me that if you are not keeping records, there is no benchmark or there is nothing for you to measure performance. But if you're able to keep records for your business, then this one gives you the opportunity to measure performance as to periodically performance of your business. Another point is that it protects your business. Organizing or having your financials intact helps you to protect your business. So there was a situation where I was visited by a consult one business that I consult for, and then this business woman was trying to explain the fact that um, she has been pushed by the tax forces, to almost collapsing her business. And this is because she doesn't have accurate financial record. You understand? So in this sense, I made it known to her, and then we can all testify to the fact that keeping good record helps you to protect your business, helps you to protect your business in this era where tax and then tax is very necessary to the government and all that. And also the fact that if anyone want to be impact or want to invest into your business, the person has to get to know the financials of your business first, and that is a way of protecting your business. So we have to take note of the fact that good record keeping helps us to protect our business. It also helps us to plan and then work more efficiently. I wonder how our mothers, work more efficiently without keeping records. We all understand that most of them, do keep records, just that they don't do it like the way we do it in a modern way. So one way that you could testify that a business is really um, being run efficiently is when the people running the business are keeping records of the transactions that are happening in the business therein and then thereafter. Another way that speaks about the benefits of good financial record keeping is generating meaningful reports. So when you have good record keeping, or when you keep good records, you will be able to generate meaningful reports for your stakeholders, for your investors, and even for government. So another benefit is to meet legal and tax requirements, as I said earlier, and then finally to manage potential risks. If you are keeping records, you can test and you can tell whether your business will stand the test of time in the next 5 years or not. You can test whether your business could stand the next economic shock or not. All because you know the financial strength of your business. So, with this point being made, I believe we all understand that record keeping is very, very important. And then at every point of transaction in your business, there is a need for us to keep records. So many people will, ask that why should we keep records? And who cares? Besides, it's my own business, so why should I keep record of the things I am doing? I highlighted here in the slides about people who are interested in the records you are keeping. It will shock you that there are actually people who are interested in the records of your business. And this slide looks at the owners and then the managers of your business. So if you are not the same person running your business, then it means you have owners, you have people who are the owners or shareholders of the business. And for that matter, they are very, very interested in the performance of the business. And they can only track the performance of the business by using the financials and then the records you have kept. That shows the performance of the business. So this tells us that owners and then shareholders or managers of the firm needs the records of the business in order to make meaningful decisions and then to track the performance of the business itself. Another party who needs the the records of the business is the government. Is the government. No matter the size of your business, the government needs the records of your business. This is a case where if you don't have any records for your business, the government will not be able to, measure your tax liability. And therefore, when they come to you, they will state any amount for you to pay. And because you also don't have any backings or financial backings, you also get to pay. Before any government will grant you, any sort of grant or loan or support, the government needs to know the financials of your business. And for that matter, every government is interested in every business on the land, no matter how the size of the business is. We can also look at auditors. If it is time for an auditor, or if it's time for your business to be audited, you can test to the fact that if there's no records, there will be nothing to be audited. And then we can finally look at creditors and then bankers. No bank will give loan to a business that does not have financial records, that does not keep accurate financial records. So you can realize that these few parties that I have mentioned are very, very interested in the records of your business. And for that matter, record keeping is very, very essential in every business. I keep on emphasizing on the fact that in every business, because many people think the size of their businesses do not need financial records, and that is wrong. No matter, with individuals, I am a personal finance consultant, so even with individuals, I advise that you keep personal financial records for your life, the expenses you make, the loans you take, the income you have, and all that. And this helps you to make meaningful decisions for your future. So there are a lot of parties that are very, very interested in the record or in the financial records of your business. For that matter, must be taken very, very seriously. Another point we can look at is the business operating cycle. And I will use this to, teach us how we can generate records for our business. So keeping accurate and up-to-date record is vital to the success of every business. Record keeping is the act of or process of creating and maintaining financial records of all transactions of a business. So below are the basic transactions of every business. Record keeping should take place in every stage of a transaction. So if you can see the slide very well, you realize that there is a cycle of transactions in there. I believe those following on Facebook can see the slide very well. This is where we are going to this is what we are going to use to um, learn how to keep records for our business, so that we don't miss any record. And this cycle here, summarizes everything your business is doing. And it will amaze you to know that every business fall under this cycle. Every business fall under this cycle. So first of all, you can start this cycle from anywhere. But for the purpose of, let's say, small business, example, small business, let's start with supplies. So as a business owner, when you go in for your supplies, you go in for your goods, you have to purchase. So if you can see the slide moving from supplies to trading stock. Trading stock. Let's take it from that angle. Moving from supplies to trading stock. From the green to the brownish box, you could see that the business owner is purchasing supplies from the creditor or the from the creditors or the suppliers to his or her inventories. And for that matter, it is a transaction. And as I said, every transaction needs to take into concern financial record keeping. So from suppliers to trading stock, there is a transaction that has been made called purchasing. It means the individual or the business owner has purchased supplies or goods and services to keep. And in that stage, or from that stage to the next stage, records has to be kept. Records has to be kept. And I'll deliberate more on that particular record that has to be kept. And then we also can see from trading stock to customers, from trading stock to customers. So you can see that when you have the goods, that is when you have and you have made your inventory, you know the goods you have, you will have to then sell them to your customers or to your clients, whether goods or services. And then over there, transaction take place. Which transaction? Sales. Sales therefore takes place. And for that matter, when sales takes place, it's a transaction. So you will have to keep record of that particular sales. Keep record of that particular sales. Then we move from customers to cash. So now your customers gives or exchange the stock or the goods and services with cash, whether cash or in the form of debt. And then this transaction has to also be recorded, whether cash or in the form of debt is supposed to be recorded. Every transaction needs to be recorded. And then even from cash to suppliers, that is when you are going back to your suppliers to get those same goods and services for your business. I believe I am communicating. So these are the cycle, and this cycle, I developed this cycle, and I believe it's touched every area of every business. So this is where transactions takes place, and this is where you are supposed to keep financial records. So I wouldn't spend much time here, but if you have any questions, you can leave your questions in the comment sector, And then I know my host, Mr. Okanse, will do justice to them, and then we will go through all of them. And now let's look at the books to keep. Now that you know the kind of transactions that goes on in every business, and then the point where you need to, make those decisions and then make those entries or records, let us then know the books you need to keep. When I say the books you need to keep, I'm trying to talk about the particular account you need to create in order for you to have your records in touch or in intact. The first book you need to consider is the inventory book. The inventory book is basically the book that entails, or the account that entails, stocks that has come in and then stocks that are going out within a period of time. And this book or this account helps you to know the number of things you have purchased in a period, let's say a month, then the number of goods and services you have been able to sell in that same period, and then the ones that are left in your shop in that particular period. So it is very essential for you to keep records of your inventory. Someone might ask that, does it necessarily mean that we have a special book for inventory? Yes, you can have a special notebook for inventory, or you can even use the electronic way of keeping your inventory. And then I'll come to that. I'll come to that. All right. Now, the next book you need to keep is your debtors book. Your debtors book, and your debtors book is the book that has the list of all your debtors. We all know debtors are the ones owing us, the ones who have some outstandings to pay to us. So the customers who have bought goods and services from us and are yet to pay. You have to get a book or an account that entails all of them, an account that has all of them, their names, their contacts, and then the transaction they made that they need to pay. Then obviously the next book you need to keep is your creditors and your suppliers book. Your creditors and then your suppliers book. So the opposite of debtors book is the creditors and the suppliers book. So this is basically the book where the people you buy from, probably if you buy from someone to sell, then the person is your supplier. But when you buy and pay later, then the person becomes your creditor. And all these transactions that goes on with you and your creditors or your suppliers need to be taken into consideration and then therefore recorded. We can also look at cash or bank. Cash or bank. Every business needs cash to operate, and then there is a circulation of cash in every business. There is a circulation of cash in every business. For that matter, there is cash that will come in a lot of ways. Cash can come in from um, customers. Cash can go out from the business. Cash can come in from investors, from debtors, and all that. So you need to also have a cash and a bank account. A cash and a bank account. So the cash account is basically, it can be a book, or it can also be an electronic what do you call it, platform where you keep your cash records. So this particular account will help you to take record of cash that goes out and comes in. Sorry, and then we also have your sales book. Any inventory that goes out as sales, whether goods or services, has to be recorded in the sales book. Then the purchases book is also the opposite of the sales book, where every goods or services you purchase in order to sell back should also be recorded in this particular book. Then we have the general expenses book, and then we have the petty cash book. I can see in the comment section that now McDaniels is asking about the difference between the general expenses book and then the petty cash book. So this will depend on the type of business you are running. In most businesses, The general expenses book is just as the name sounds, it's a general expenses book. And then with this one, whenever the business makes any expense that comes with getting goods or selling goods, it is jotted down. So any expense that the business makes at the end of the month is being jotted down, or at the end of the day is being jotted down. That is a general expenses. Everything goes in there. But with the petty cash book, the petty cash book comes in when you are in a business where um, you you make petty expenses. You know, you have major expenses that is based on your budget for the year or for the period. That is that those are major expenses. And then you also have petty expenses that are not really planned for, like in the budget. So over here, you create a petty cash book where those, and then you allocate an amount into the petty cash book where you will be able to take those monies for the petty expenses that are not in the what do you call it, are not in the budget. That, yes, can be in the general expenses book, looking at the kind of business. But in most businesses, it is ideal to keep a petty cash book, and then at the end of the day, the petty cash book's summary or total goes back into the general expenses book. I believe I've made justice to this, and I believe it's clear now, McDaniels. Great. So let me continue. If you have any further contribution or questions on this, you can as well leave it in the comments section. So slide 8. Now let's look at some. Please take note that I wasn't able to capture all the transactions here, then how you can record them. But I am able to capture most of them, the major ones, and then how you can record them. And also keep in place that when it comes to the recording, you can either do that manually using books, notebooks, to mix or to do that recording. You can delegate that to one employee in your organization or in your business, or maybe you can delegate that to maybe yourself. But since you don't have time to do that, you can maybe use an hour at the end of the day before you close to record all this manually or electronically. And when I talk about electronically, I'm talking about where you can use softwares to do that. So let's look at um this particular. Mr. Okanse, can you please mute your microphone? Thank you. So let's look at this particular uh, item, and then how we can record it in our books. So looking at purchases in general, purchases are basically um, buying or goods that have been bought to sell, goods that have been bought to sell back, or services that you have acquired to sell back. So how do you record this, or record your purchases? And then I stated here 4 books you need to record your purchases in. 4 books you need to record your purchases in. One, the purchases book itself. You need to indicate there that there has been a purchase. And then 2, your inventory book, because if you are purchasing, it means you are buying. So it means the purchase or the new goods you have bought is going to add up to the inventory books, or to your inventory. And then 3, your cash book. Purchasing means cash has gone out from the company. Therefore, you need to indicate that cash has gone out from your cash book. And then 4, the supplier or the creditor's book. Now, since you are buying from the creditor, you need to make sure that you have also recorded that in your books as something you have taken from your supplier or your creditor. I believe we are all clear. All right, so let's move to the next slide, sales. But before that, let me take now McDaniel's questions that says that, which means general is the major sales and supplies, whilst petty is, for example, ECG, or let's say sorted storage bag for item, right? Uh, okay, so let's shelve this particular question. I believe Mr. Onkasi will bring it on board for us to discuss it. All right, so looking at sales, um, sales are basically the exchange of goods and services for money. And in your business, looking at your business, sales will be you selling of goods and services out to a client or a customer for money. All right. So these are the books you can take into consideration to make records at the end of the day when sales is done. The first book is your sales book. A sales book, since it's a sales has to record that. Two, your inventory. Goods is going out of your inventory, therefore it has to be recorded. Three, your cash book. Money is coming in, therefore cash book has to also take care of that. Four, your debtors book. Whether the customer bought on credit or not. So you should know that when a customer buys on credit, that's where the customer will be recorded in your debtors book. And the good thing here is that if you're able to take note of every transaction as we did to purchase, in purchase alone, you have recorded four transactions of a transaction in four ways. You understand? And then just in sales, you recorded it in four ways as well. So at the end of the day, you will see that you have a lot of books, you have a lot of transactions, and then you will be able to make meaningful decisions as in the total sales, total inventory, total cash, total debtors. And then you will also be able to know the number of debtors you have so that you'll be able to make follow-ups to get your money back. Now let's look at the general expenses. So as I explained here, I think McDaniels will get it clear here. The general expenses are costs the business incur to sun to operate its daily operations or to take care of its daily operations. So examples are rent, utilities, salaries, and mostly the general expenses are the ones that have been budgeted for. The ones that have been budgeted for. So some you can record it in a petty cash book, then you can also record it in the general expenses book. There's one book that is supposed to be here, that is the cash book, that is not here. So maybe the petty cash book will take care of that because money is coming out of the cash book. All right. Now to end the um, presentation, I want to speak a little about ways to keep your records because it looks like most of us have idea of these transactions and then um, how we can keep them. But the problem really is how or are we practicalizing it? Are we really doing it individually in our lives and then also for our businesses? Are we really keeping records of the finances or our finances, the finances of our business or our personal finances? If you are not, for yourself, me, I like advocating for individuals. You should be able to keep records of your finances for yourself. I do that every month for myself. I know the monies that has come in, the monies that went out. You know the say that goes that don't give small money chance. Don't give small money chance. So don't say I am buying water here, so I will not record it. No, don't give small money chance. You don't know what small money can, pile up to become or affect your finances. So please, I advise that small business, no matter how small your business is, you should have your records for your business separate from the records of you as individual, the monies you spend and then the ones you receive. Now, how do you do that? There are two ways to do that. One, manually, and then the manual way is keeping it mostly in books. Get a book, get a book like this, get a book to record all your expenses, your purchases, your debts, your creditors, your supplies, and all that. So all the um, list of books I created or I listed in the slides, you can get special books for all of them so that you record them against the date and then the people involved and all that. That is the manual way. the advantage with the manual way is that you are not going to lose any data because probably it's a book, unless it gets bent, And the other way to keep record is through electrical means and electronic means. Yeah. In today's world, everything is digitalization, and then there are softwares and then applications that can help us to easily keep record of our businesses. you know Personally, if you contact me, I will help you with softwares you can use to keep records of your business or even for your personal life. Yeah. So I will end here, and then I will welcome questions. I think my contact is on the screen now. I am ready. I work with African Entrepreneurship School as a business and financial consultant, and then we are ready to, assist you to keep your books in touch. Anytime you are ready, you have my number on the screen as well. You can contact us, then we will help you with a small charge, help you keep your books or keeps them in touch. Thank you so much.
All right. All right. Thank you very much, Mr. Sam Hagan. For those of us who joined
You're welcome, sir.
quite late, Mr. Sam Hagan is a financial consultant with the African. Yes, so thank you, thank you. So those of us who came joined late, Mr. Sam is a financial consultant with the African Entrepreneurship School, and today we actually discussing some few questions I want to throw. Hello, Mr. Hagan, can you hear me? Yes. Hello, Mr.
Yes, Mr.
Hagan.
Okase, I can hear
Yes.
you, but your
So
network is not very stable.
yes. So I'm back. I'm back. Can you hear me now?
Yes, please. I can hear you clearly.
Can you hear me now?
Yes, please.
And hello, Mr. Hagan.
Yes, Mr. Okansi, I can
Hello.
clearly hear you.
Yes. So thank you very much for taking us through the record skipping. I want to find out some few things. I want some to throw some questions to you if you can share some little lights on them for us. So is there any difference between stock taking and then inventory? Is there any difference between stock taking and then inventory? That is one of the questions. And then the second question I want to throw to you is what role does the financial bookkeeping plays in the case of GRA and taxation? If you can hear me. And then the other one also has to do with, are these records book accessible for purchase, and where do entrepreneurs get them? Please, can you hear me? And then if yes, you can help us throw some light on these questions. Thank
All
you.
right. So the first question I think talks about the difference between uh, record keep inventory and then stock taking, right?
Yes, yes, please.
All right. So inventory is basically the same as stock taking. I think inventory are basically stocks. Yeah, so stock taking is just a process of taking stocks, getting to know what has come in and what has gone out, as in respect to the goods and services. Yeah, so it's basically the same. Yeah. And the second question, please, can you come again?
So the second question, as you were discussing or telling us about the benefits of stock inventory, we realized that you mentioned some institutions that needs these inventories or these records for a particular purpose. So I wanted to find out from you now, as entrepreneurs, what role does these stock keeping or financial records keeping, what role does it play in the case of GRA and taxation, because since they are in charge of mobilizing tax for the government, what role does our records keeping plays to the benefit of ourselves as individual entrepreneurs? And
All right, Mr. Okansi, if I heard you right, you want to find out the role um, GRE plays, right, in the record keeping of a business. I think I made it clear in one of the slides where I spoke about
the
the fact that
role,
Mr. Okansi, I can hear you. You were saying something. All right. So as I was saying, um, GRA, or the Ghana Revenue Authority, is interested in the performance, or in the performance of the business, and for that matter, for them to have access to and the tax, for the business to be tax compliant, and then to also have access to the revenues that will come from your business, for the government to also run its business on its own. So GRA in itself has strong interest in the record keeping of a business. I hope that answers your question, Mr. Okansi. All right, I think Mr. Okansi has issues with the network, but if you are online with us and you have any other questions, you can bring them on board. All right. I think the second question is, what does financial bookkeeping place financial bookkeeping place in the case of GRN taxation? I think I've made that justice to that. And the third question is, are these record books accessible for purchase?
Mr.
And
Hagan,
where do the entrepreneur get them? Oh, okay. So I am now getting the third question. That says that
Mr. Hagan,
are these
can you hear
record books
me
accessible for
now?
purchase, and where do entrepreneur get them? Mr. Okansi, I can hear you. Second question is, what does financial bookkeeping place in the case of GM taxation? I think I've made that justice to that. Record books for Mr. Okansi, can you please mute for me whilst I do justice to the questions?
Yes. So I just wanted to make um, a quick im-
Okay, so Mr. Okansi's network is down. But I think the last question he asked was, are these record books accessible for purchase, and where do entrepreneurs get them? All right, so yes, this, if you want to keep the records manually and you want to have the books for you, there are books that are designed for business owners or bookkeepers to be able to have this record keeping, or records keep these records manually. And for that matter, AES, if you want those, any of those books, you can contact AES, or you can contact myself, and then we will get you those books for you to keep your records. We can also help come in as a consultant to help you, train you on softwares you can use to keep your finances in track. All right, I think Mr. Okansi's network is not good, but we are still welcoming questions. If you have any question, if you have any question. Okay, I can see Mr. Mensah's question. Mr. Joshua Quay Mensah. So one, why is proper record keeping essential for both small and large business? Wow, I think we've made justice to that. So record keeping is essential for both small and large business because it is the only way those businesses will be able to track their performance and also provide reports to their interested parties, such as their debtors, their creditors, the government, and all that. Question two, what are the key types of record every business should maintain? A key type of records every business should maintain are the ones we mentioned, such as the what do you call it? The purchase book. The I think we have them here. These are the key accounts every business needs to maintain: the inventory, debtors, creditors and suppliers, cash bank, sales, purchase, general expense, petty cash, and all that. There are more. Yeah. And then question four, can you share the common mistakes businesses make in record keeping? Great question. So there are a lot of mistakes that businesses make when it comes to record keeping. And is um, number one mistake businesses make when it comes to record keeping is not keeping accurate records. Not keeping accurate records. This is because sometimes your one part of the books will be accurate and the other part of the book will not be accurate. Example, if some people keep sales and purchases, and when they are keeping sales and purchases as an account on its own differently, you can see that the purchases book is accurate, whilst the sales book is not accurate. This will, confuse the person using these accounts to make decisions. Because it will not balance. The book will not balance. The account will not balance. The records will not balance, and therefore it will distort decision making. You understand? So this is one mistake, that's common mistake that most um, business people do when it comes to record keeping, not keeping accurate um, 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 records. And then another mistake they do is when they don't have archives. They don't keep their records. So some people just think keeping record is just keeping records, where they just keep record, and in a year they forget where the previous year's records are. For your business to be solid, you need to at least have 5 years archives of your records. You understand? You need to at least have 5 years of the archives of 5 years of your records in at least your archive. Yeah, yeah. So that's another mistake they do. One thing we can also talk about is, not getting experts, concern, or not involving experts in keeping records. Sometimes you may think it's your business. You don't want some business owners think it is their business and they don't want anyone to interfere to know more about their operations. Therefore, they will not invite experts to come and see their work or the financial records they are keeping. No, there is no harm in inviting experts or consultants like AES or individuals like me to come in and then help you to put your books together, or to just oversee the books or the financial records you've made. you know and another mistake we can also see is or we can also talk about is not inviting external auditors, people to come and audit. So in the period of 6 months or 1 year, you can just invite an external person, sit the person down, explain your operations to the person, give the person the books or the records you've made so far, for the person to just audit your work. And this will help you because the person is going to ask valuable questions that will help you to make sure your books are intact. So question 5 says, what are some effective digital tools or software for maintaining records? That's a good question. So we have a lot of tools or softwares for maintaining records, but the most common ones are QuickBook. QuickBook, we have the QuickBook Online, then we have the system itself for QuickBook. So you can operate QuickBook online. Just go online, log in, and then it will give you um, an account, the account we mentioned, purchase your debtors, and then you just insert the transactions, and then it makes the reports and then provide you with report and all that. So QuickBooks is there. We have Sage. We have Sage. We have Sage. And then if you are not someone who can really use these softwares, you can also use Excel. Excel. There is a way to, organize your Excel in a way that you will be able to keep, I mean, Microsoft Excel, in a way that you'll be able to keep record of your business. You know. So if you are also not good with Excel, you can get someone to, create some Excel sheets for you that will have purchases or the key purchases, sales, debtors, and all that. The key types of records you need to keep for you to keep these records. I think the sixth question Mr. Mensah asks is, how long should businesses retain different types of records, financial, legal? The question. Uh, okay. This Mr. Joshua's sixth question: how long should businesses retain different types of records? All right, let me take this way. This is how I understand it. So probably I answered that by saying that businesses should at least have 5 years of their business records in the archives. Yeah, I think that will answer Joshua's questions. And then Patience is asking, please, how does a person running drinks shop keep record properly whereby he or she feeds from the same business? Wow, that's a laudable question from Patience. So, Patience, um, I understand your situation, but I also want to make it clear to you that almost everyone feeds from his or her business. You know, almost everyone feeds from his or her business. So, we are not saying you shouldn't feed from your business. When it comes to record keeping, we are just saying that everything you are doing with your business, make sure you write it down, or make sure you have it documented, or make sure you keep records of everything that is going on in your business. So that is one. And I want you to take that into consideration. Number two, I know your question is pertaining to the fact that how will one be able to differentiate between personal finance and then the finances of the business? As in, me and me run a shop, no. How do I separate my money from the shop's money? We are the same people, but how do I separate the money? So with this particular question, it is very diabolic in a way that it's between the owner and then the business. But for your business to be solid, as I said, you need to develop strategies. And one strategy is that every transaction you make, even for you, the owner, you have to write it down. And you don't have to, eat into the finances of the business. You have to know that the finances of your shop, your drinking shop, is different from your personal finances or the family's personal finances, your family's personal finances. I hope you understand that. So, for that matter, you need to run your shop different. It means that when you yourself take something from the shop, you have to pay. Yes, you have to pay when you take something from the shop. When you have to become a debtor. If you don't pay, you become a debtor to the shop. Therefore, you have to pay later. Yeah. So if you are able to do that, it will help you to track the finances of your business separate from your personal finances. So please, let's take our businesses serious, where we treat our businesses as separate entities, different from us, no matter the level of your business. I believe this answers your question, Patience. All right, so we are still taking questions, and I think in the next 2 minutes, we're bringing this webinar to an end. I believe it has been a great section. I believe we've learned a lot on personal and record keeping for businesses. Sorry about the network, but one advantage is that I know people are complaining about the network. Yeah, but one advantage is that after the this session, the recorded version of the whole program will be on Facebook. So I will entreat all of us to go through the program again. Just go and tap it, and then you know listen to it again to help you as a business owner to keep track of your records, and then to also help you to make good decisions. So before we end, I would like to also tell you a little about African Entrepreneurship School. African Entrepreneurship School is a school that educates entrepreneurs and helps them to put together um, um, their businesses and make it more formal for them to also be able to attract grants from um, investors and to also grow their businesses. We also train um, businesses or entrepreneurs on customer service excellence, financial record keeping, as we are doing. Financial management is a whole course. We also have one on how to receive grants, how to formalize your business and all that. And if you want to join African Entrepreneurship School, you can get my contact, and then we will be of help to you. And then if you also want to put your finances together, you can also have my contact. Just WhatsApp me or give me a call, and then I will be in touch to give you all the support you need to put your finances together. Thank you so much for being with us and then for staying to this time. Have a wonderful evening.